Welcome to today's webinar, brought to you by the United Church of Christ Cornerstone Fund. Thank you for joining us. The Cornerstone Fund, now in its 25th year, offers faith-based, socially responsible investments to individuals, churches, and nonprofit organizations of the United Church of Christ. With these investments, the Cornerstone Fund provides low-cost financing options for local churches and affiliated ministries across the country. During today's webinar, our presenters will offer 45 minutes of expertise, followed by a 15-minute question and answer period. You may submit your questions at any time during today's webinar by clicking the Q&A button on the bottom of your screen. Before we begin, however, let us first quickly introduce you to today's presenters. For full bios of each presenter, please visit cornerstonefundwebinar.com. Maria Coyne is a financial services executive with more than 30 years of experience in commercial and retail banking, and currently serves as president and CEO of the United Church of Christ Cornerstone Fund. She previously served as executive vice president of KeyBank, and among her many accolades was twice named one of the 25 most powerful women in banking. She's also frequently featured in the Wall Street Journal, CNN, NPR, Bloomberg News, and Businessweek. The Reverend Karen MacArthur specializes in financial management for churches and faith communities. She is an ordained minister in the United Church of Christ, and for the past 15 years, she has offered consultation in financial services through Congregational Finance, while also serving as Minister of Stewardship and Finance at First Church in Cambridge, Massachusetts. Welcome again to today's webinar, Top 10 Best Practices of a Financially Healthy Congregation.
Greetings from the Cornerstone Fund and welcome. Karen and I both want to thank you for taking time out of your busy day to join us today as we cover the 10 best practices of financially healthy congregations. As the introduction stated, we'll first have about 45 minutes of conversation, and then we'll leave at least 15 minutes for Q&A. You can submit your questions throughout, let them queue up, and we will answer them at the end of the presentation. Before I jump into the objectives of today's webinar, I want to first start with a little bit of a caveat about best practice. Joining us today in the webinar are churches from Maine to Hawaii, churches that have membership that ranges from 50 members to 1,200 members, churches that have been around for 3 centuries or are just a little less than 3 years old, and churches that are members of the UCC as well as other denominations. So all of that is by way of saying, please translate these best practices into something that will work best for your church. So let's cover what our objectives are for today's webinar. Our main objective is to share with you these best practices that we have gleaned from churches that we have worked with that are financially healthy. Our second objective is hopefully you'll leave with at least just one good idea. And thirdly, we're going to challenge you to be inspired by what you hear, to put something new into practice, to try something new in the financial life of the church, and to look at something with a fresh set of eyes. Ready? Let's get going. Let's get started with our first best practice, which is to clearly identify roles and responsibilities for all people involved with the finances of the church. Now that'll include, obviously, your treasurer, any council, consistory, or governing body that has any kind of financial authority, whether that's a finance committee, an investment or endowment committee, a capital campaign committee, and so on, your board and their other committees, whether they're building committees and so forth, and of course the pastor, the moderator, and other church staff. Each must clearly have defined roles and responsibilities and areas of authority, particularly related to monetary policy or handling money. This is really important, and equally as important are the necessary skills and controls, but we're going to get to that in a little bit later in some of our later practices. I wanted to start by first talking about the importance of the role of the treasurer. Depending on the size of your church, the number of officers you have, even the traditions within your church, the role of the treasurer at your church may actually look very differently than the treasurer at the church down the road, and that's okay. You have to abide by what works for you. And also, I'm going to share with you a list of the duties that are typically, at least the oversight of these duties, are the responsibility of the treasurer. And it starts first and foremost with managing the church funds and maintaining accurate records. That's an obvious one, as is reconciling, statements, whether they're bank statements, investment statements, or lending statements, preparing and submitting reports for payroll tax and other authorities and ensuring compliance, tracking income and expenses against budget, and importantly, alerting leadership to potential problems, regularly preparing reports for leadership, ensuring your assets are protected and insured, helping to prepare the annual budget, assisting with outside accountants or auditors as necessary, and training an associate treasurer to ensure continuity. This is an important point. Karen, can you talk a little bit about what types of skills you think are useful for people in the role of treasurer of a church?
Sure, because that's like an overwhelming list of responsibilities. And I think that what we're finding is that as churches grow and have more and more things that they're responsible for doing, they're having difficult time finding one person to do all of these things. And so I'm finding that the absolute best or most important aspect of a treasurer is somebody who is an optimist, somebody who looks and says, hey, this glass is half full. We have these resources. What kind of ministry can we do here? Rather than someone who says, we don't have the money, we don't have the resources, things are problematic. So that sort of sense of optimism becomes a really important ingredient. So that doesn't talk about the skills that are necessary, but it talks about the approach to the responsibility of being the treasurer. Skills can be learned.
That's right.
Expertise can be learned. The other sort of attribute of a treasurer that I find in the churches that are financially healthy are a treasurer who knows what they do know,
Absolutely.
but also knows what they don't know and isn't afraid to learn something new. They might come to a church with a business expertise, but not understand nonprofit finance, or they might have worked in a large organization, but haven't learned how to work in an organization that has just a few employees where people are doing everything sort of soup to nuts.
That's right.
So that flexibility becomes a really important task. And
it's an important distinction because often we think just take the person that's an accountant in their day job and plug them into the role of treasurer. And it's, as you point out, a very different type of accounting.
Exactly.
Yes.
Exactly. So we have to recognize, and this actually leads us into our second point.
That's right.
We have to recognize what people are good at and what they're not. We have to recognize the skills that are there and aren't there. And that's not in a judgmental way. It's just being clear about what we have.
That's right.
And so what we've talked about is we want to recognize financial gifts and also recognize when those are lacking. The first thing is these days, people don't necessarily like numbers. So if I ask a congregation, hey, how many of you, feel you understand or enjoy numbers? Maybe 10% of the people will raise their hand.
I would raise my hand, but I'm a little bit of a nerd.
Exactly.
Yeah.
Well, and so what we want to do is to recognize that our responsibility is to the whole congregation, not just to the numbers people. So, so recognizing that not everybody enjoys numbers is important, but also then I really find one thing that sets apart the financially healthy congregations from the other is that they've developed procedures that are financial procedures for the church that different treasurers will come in to implement and carry out and refine, but the procedures belong to the church.
And not unique to the individual.
Not unique to the specific treasurer where this one treasurer says, oh, I want to use this software and do it this way. And then there's a new treasurer and then somebody else comes in and wants to do it differently. If the church is taking ownership of those responsibilities, then the church can refine them, the church takes responsibility, and that really helps a lot in building that continuity. And it makes it easier to find the next treasurer. The goal in all of this is to honor the gifts that everyone brings to their involvement and their leadership in the church, and to not expect everyone to have to do everything.
That makes perfect sense. Let's talk a little bit about our third practice, which is developing and monitoring an annual budget. The important considerations here is first of all, that you make sure you get input from all of the ministry areas of the church. Everyone needs to have a voice. And the other thing I would always encourage people to do is to start early in the process. Make sure that you build in enough time that you can have your budget fully assembled and ready to be voted on before your fiscal year starts. An important, very important point. Also, make sure that you have prepared a good summary level budget. As Karen points out, not everybody's going to love the detail. I love the detail, but we've already established I'm a little bit of a finance nerd.
Takes two.
And a good summary level budget does a couple things for you. One, it makes it easier for the people that are voting on the budget to really embrace what's happening. It honors your process in your congregation. And then you have the detail behind that'll be important, supporting information. Once this budget is approved, it's also important that you continue to monitor it and report back monthly. We'll talk more about that in a little bit. It's also best to have a very explicit process. If you need to exceed a budgeted expense item, it's good to know in advance what levels of approval you're going to need to do that.
And we actually have a few slides about that, about a process that we put in. So, and first we have our summary budget, which is just, I say if you can't fit it on one page, it's That's too right. much. But this summary budget just shows the different levels of, for example, an education budget or a worship budget or a property budget. It doesn't mean you wouldn't have those details, That's right. But the question is what it is that the congregation actually votes. And if the congregation votes this summary level budget, then the individual board has that flexibility during the year. But then what happens if you need to go over budget? Now, clearly, if an entity has a budget for $2,000 and they end up spending $2,004, it's not a problem. That's right. But if you have a process that you vote and include as a part of your financials each year that says, what do we need to do if we need to go over? I had one congregation who said, okay, well, let's just say that everybody can go $500 over budget. And if not everybody's going to, and some will come in under budget, but if it's up to 500, that's fine. The next level, they would need the treasurer to agree that they could go over budget. So for example, perhaps it's up to, I think in our example, up to 1,000, or maybe it was 1,500. Mm-hmm. They were, had to get the treasurer's approval. And then at the third level, we would have the council, at the council level. Mm-hmm. You want to have that level be low enough that if the sewage pipe breaks, you don't need to call a congregational meeting. But at the third level, you would have the council to approve. And then finally, over some amount, you would need a congregational meeting. What this does is it honors that congregational process. If the congregation has approved an overall budget of a certain amount, what happens if you go over? Some congregations just shrug their shoulders and say, well, we'll try better next year. Mm-hmm. But if you have a process that says, hey, no, wait a minute, we're going to have to go and bring this to the congregation, then the congregation gains more ownership into doing what they can to stay within that budget.
Yeah, I think that's important, particularly if something catastrophic happens. And people sometimes know something's bad or something had big impact, but involving them in that decision-making, I think, is a really critical step.
And the Cornerstone Fund is very involved with these things around building issues.
That's right.
And then sometimes a church will get involved in a building project after a catastrophic event of some sort.
Definitely. So other thoughts on financial reporting? We talked a little bit about, Karen, do you want to take us through kind of some of the basics of...
Well, and before we get to financial reporting,
Yes.
we have to figure out how we're keeping track of all of this.
That's right.
So our fourth best practice is about maintaining financial record keeping that is consistent with what accountants like to call generally accepted accounting principles. It's abbreviated as GAAP, GAAP. And the first component of that for a nonprofit organization is about what's called fund accounting. When Maria first called and said, hey, would you be interested in doing this kind of a webinar? What do you think are some best practices? And I said 10. I said fund accounting, and fund
That's
accounting.
True.
So what fund accounting is, and I've done full 3-hour webinars on all of this. What fund accounting is keeping track of the source of the money that a church has and any restrictions that are tied up with that source. So the easiest way to give an example for this for UCC congregations is to talk about, well, accountants call them donor restricted funds or donor restricted net assets. But the most common example is an offering that we often take in the spring of the year that's called One Great Hour of Sharing. You know how somebody, when they give you a donation, the check is actually payable to your local church. Then you deposit that, but the only thing you can do with that money is donate it to One Great Hour of Sharing. So that's an example of a donor restricted fund. The donor has said, here's my money, you can only do this with it. Or here's my money, you can only paint the church with it. That's a donor restricted fund. There's a variation on this, also donor restricted, but it's called permanently restricted funds. And that's when a donor says, here's my money, but you can't ever spend it. You can just invest it, and you can then use the proceeds for something for the church. So that, and having this distinction between unrestricted money and donor restricted money is an absolute essential best practice. And then within the donor restricted, keeping track of what is actually permanently restricted and what is temporarily restricted. In other words, restricted, but you can spend it all. And
generally for a specific purpose, right?
Yes, and also time.
That's right.
Here's my money, but it's for next year's pledge. That's another donor restriction that you have to honor. So, so having those distinctions and keeping that vocabulary there, actually, it rises to the level of best practice for me, because it tells me that the congregation is serious about honoring what they're supposed to do. Technically, an attorney general can actually come to a church to say, we know you have these donor restricted funds and we'd like to see the proof that you have spent them accordingly, or that you're about your endowments and things like that. So it's something we need to take seriously. So fund accounting and having the reporting, which we'll get to, that's the first piece. The second component of financial record keeping that's essential is a way of keeping track of your expenses. There's basically two different methods of bookkeeping. One is called cash basis, and one is called accrual basis. And in cash basis accounting, you might think, oh, churches are simple, but cash basis accounting can sort of throw off. Cash basis is based on when you write the check. And so it could be 1 year. If say you delayed paying an electric bill, you might only have 11 electric bills 1 year. And in cash basis accounting, you might think you spent less than you really did. Right. In accrual basis accounting, you would have 12 monthly bills in a year, no matter when you actually paid it. I had a church that the treasurer retired, moved to Florida, and the new treasurer was learning how she did the job and came and said, I think we have this real problem. She had said, whenever you get a bill, you just put it in this folder in the bottom. And then every week when you do the deposit, then you'll know, you just pay bills till the checking account runs out of money. And then the next week you'll be able to pay the next bill. And over the years, even though they'd only had a small deficit every month, they actually had $8,000 of unpaid bills in the folder. And if they had been using accrual accounting, they would have known that along the way. But there's also the flip side is on income. A lot of churches have people who will pay their pledge in advance, or who might this time of year get a contribution statement and say, oh, wow, I didn't realize I didn't pay $75 of my pledge. I'm going to pay that now. Right. On cash basis accounting, you keep track of things based on when you make the deposit. So in this example that we've drawn up, if on a cash basis, it looks like over the years that the congregation is having decreasing contributions from year to year. You see the 149,000, then 147. But if you use accrual accounting and you count things when they are intended for, in other words, here's my payment for my 2018 pledge. No matter whether it comes in 17, 18, or 19, that's included in the 2018 line. You actually see in this church that contributions are increasing from year to year. And you wouldn't want to make a decision based on your thought that things were decreasing when in fact they were increasing, or the other way around. So accrual-based accounting is required for nonprofit organizations anytime you have financial statements that go beyond your local congregation. So if you are applying for a bank loan or anything like that, you'll need to have that.
Or a Cornerstone loan.
Or a Cornerstone loan, exactly. That is a bank.
That is a bank loan, that's right.
Better than bank loan.
So those are some of the financial record keeping principles. And then the third sort of minor thing is you should have affordable software that is something that people can use and know how to use. I almost always recommend that churches go to TechSoup.org, join that. If you're a nonprofit organization, you can get QuickBooks for $50 for desktop QuickBooks. And since that will last you for 3 years, that's literally $17 a year for record keeping. There are other programs that are good, but they have a price tag to them. So you want something that is affordable for your congregation and also something that doesn't take a lot of training to learn to use.
And fairly universally used, right? So there's a common language of users in that community that can help.
Right. So what we're trying to do is to provide answers to basic questions. How are we doing? What funds do we have? Are there any restrictions? And that record keeping should lead you to that place.
One thing that I always like to bring up when we're talking about record keeping, and I know we're going to get a little bit more into reporting, but particularly when you're presenting a budget to a congregation or you're presenting an update to a congregation, a lot of people like visuals. So a chart or a bar graph or a pie. I just threw up one example here of a picture that actually tells several stories. In this particular depiction, we're seeing both year-to-year comparisons as well as a relationship between number of members, number attending, and number giving, or number of average giving. The next picture that I have is actually a pie chart. The pie works extremely well. In this case, we're telling the story about how the expenses of the church support the various ministry areas. And it really jumps right out at you how much of the church's budget is spent in each area. I chose this particular graph because it's an actual graph from a church that we worked with once. And you see that 50% of their budget is being spent on basically maintaining the building. And to us at the Cornerstone Fund, that can be a red flag, that maybe you're spending a disproportionate amount on repairs and insurance and other things to upkeep the building. Now, there could be perfectly reasonable explanations for that, but it's always something that we would want to double click on and make sure that you're adequately preparing for other things that may come up with regard to maintaining that building.
So what you want to do is you want to have your numbers, you want to have your visuals, and you want to be able to explain things. And keeping those three things sort of in tension helps so that everybody, the whole congregation, somebody finds a way that they can understand what's going on.
And be very transparent. Yeah.
Very transparent. Yeah. But the capital things then brings us to our fifth point, which is about how we budget for and pay attention to what we call capital needs. Capital is defined in bookkeeping terms as something that lasts longer than your budget period. So in other words, the things that you don't do every year. So cleaning the building is a maintenance annual cost. Right. Mowing the lawn is an annual cost. Replacing the lawn is a capital cost. Right. So what we want to do, and what we find, both of us find in me and the record keeping side and you in the loans side, find that churches that have a capital reserve or who have done capital planning beyond just that 1 year are much better equipped to for long-term financial sustainability. So one of the questions is just how to create and revise that plan. And the first thing, you can do it as sort of as simply or as complexly as you like, but the first step is to look around and to see what are the kinds of things that you would need to do. For example, painting the church, or replacing
the boiler,
or
paving the parking lot, all those kinds of things.
The first thing I learned in my very first church I served was that stained glass windows have to be re-leaded every 100 years or so.
And by someone who knows what they're doing.
Exactly.
Right.
So those kind of capital things, and write them all down and investigate the cost of doing that right now. And then figuring out your schedule over the next, whether it's 10 or 20, one of my treasurers wanted a 100-year plan. Mm-hmm. But figuring out when that would be done, and then using an inflation factor to figure out how much it would cost to do it, say, 5 years from now or 7 years from now. And by writing all those things down and adding them up, then you can see how much money would we need to add to a capital reserve each year so that we always had enough in our capital reserve to do what needed to be done. So in this example, we're adding $4,000 each year, but you see in 2018, nothing was done. It just added 4,000 to the balance. In 2019, there were computers that needed to be purchased. And so the balance went down, and then there was painting. And so what you see is a combination of adding to that and subtracting from it, but keeping this capital reserve on a separate budget. That's like a 10-year budget, not an annual budget. And that's something that we find smooths out the need for funds from year to year and helps the church to understand its financial sustainability.
I agree. It's a really important practice, and there's not one format that's better than another. I've worked with a church that their building committee took the lead on creating a grid of all the various systems and when they were last replaced and when they would likely need to be replaced again. And the important thing is that you create this fund, capital reserve fund, rainy day fund, call it what you will. I think it's a really important practice. We talked a little bit earlier about reporting transparency, and I think that we want to just double click on that and how we utilize those reports to continue to engage people in the finances of the church.
So reporting transparently has to do with two things. One is the format of the reports, but the second is then who gets to see those. So in terms of the format, that's actually something that's defined by CPAs who specialize in nonprofit accounting. The rules were changed in 1993, and they've been revised a little bit more recently. And they basically call for two major three reports altogether, but two of them that are really of a lot of interest to the church. The first one is the one that probably most of us are familiar, and that's one that has an annual budget, and it has income and expenses, and we measure how we're doing against our plan. In nonprofit terms, that's called a statement of activities. If you were a business, you might call it a P&L. But it's a statement of the activities of the organization, and that's something that we're much more familiar with. But the second one is what in a business might get called a balance sheet, but in a nonprofit gets called a statement of financial position. And that's one that basically tells you the resources that you have. So I think of the financial position as being a snapshot. On the day before the year began, how much money did you have? And you can list out your bank accounts, those are called assets, and you can list out anything that you owe, and those are liabilities. And if you subtract those two, you end up with what the accountants call net assets. Assets minus liabilities is net assets. So in the example that's up on the screen, you see this church has $228,000 in assets and $6,000 in liabilities as of the end of 2017, which leaves it with net assets of $222,000. And then the nonprofit rules require you to indicate what restrictions there are on that $222,000. And that's where you get this vocabulary we've been talking about before about unrestricted funds, temporarily restricted funds, and permanently restricted funds. So what's important is when you compare these, I had one treasurer ask me, is there one number I can look at from year to year and tell how the church is doing? Well, that number is actually your unrestricted net assets. So in this instance, you might think like, oh, I see, the church has really gained a lot. It's got $15,000 more dollars. But the number to really compare is looking at the unrestricted funds that went from 132,000 up to 164. So this church is doing well from one year to the next and showing that increase. So that's a financial position. And of course, Maria and I are going, we're just
skimming the surface. Right?
I could do a whole 3-hour webinar on financial reporting. So the important thing, though, is to indicate that we have these resources, because if I see a church and it has a budget and it's showing me that it has a $2,000 deficit, well, I want to see the financial position. I want to know, does this church have $1,000 in the bank, in which case a $2,000 deficit is a huge problem, or does it have $100,000 in the bank?
And it's a mere blip.
Right. So what we want to do is to be able to know what we're starting with, the financial position, and then to have the budget report, the statement of activities, not only the regular budget, which is the left column here, but also to show what money is coming in and going out in the donor restricted funds, and in if you have an endowment, that would be the permanently restricted funds, and to see what's going there. So you want to see the whole picture.
Right.
But then the final question is, who gets to see it? So I actually recommend that churches establish a place where accounts reports can be posted, either using something like a Dropbox folder or a password protected page on their website, or some place where this information can be posted and available to all who need it. It also helps if you can produce an itemized report of your primarily of your income and expenses, to just show people. So if they have a question, hey, wait, why is office supplies up so much? They can just go to the itemized report and see what elements are making up that number, and to see if anything has been double entered,
Right.
or misentered. So having, the goal is to have no surprises. The goal is to have reports that are available, that are consistent from year to year, and that give people the tools they need to be able to answer their questions about how we're doing, and about what kinds of financial decisions are on the horizon.
Right, and really important from our perspective, particularly if you want to launch a building project, or you need financing for some reason, it's those reports are critical. Because of course we would never want to lend money to somebody that didn't have the ability to repay, right?
And also, they also show that you are somebody who understands, if you have a loan, the difference between the principal portion and the interest portion
That's
of
right.
your payment, and how that's booked and how that's reported in your finances.
Very important. Let's keep moving here, Karen. Let's talk a little bit about having good controls in place. We mentioned it earlier in the past, of course, that always meant kind of a dual control process, and having policies that would protect both the church and the people involved with the finances of the church. Can you expand on this just a little bit?
We talk about, dual controls. Sometimes I came of age right when computers came of age. In the old days, we talked about dual controls, meaning that
Two
one
people.
person would take care of the money coming in, and one person would take care of the money going out. And by separating those duties, you were protecting things. Well, there's a lot more transparency now, with bank statements being available online and people being able to see. So I've shifted it a little bit more in my conversations with churches to not so much dual controls as two sets of eyes, having
Okay.
two people who understand every aspect of what's going on in the church. And when we talk about this, we talk about internal controls. That is, inside the organization, how are you paying attention to how things happen? The first step for developing this is actually to write down what your process is. So you can do an exercise and literally start with, somebody comes into worship on Sunday with $10 in their pocket. How do you trace that $10 all the way from there to when it's reconciled on the bank statement? And who does what by when? So when you start this, you literally have to start with, like, who does the call to the offering? Who collects the offering? Where is it sitting? Who takes it to the, or where do they take it? Who counts it? How is it recorded? Is it recorded in software that records people's contributions? How do statements go out? You want to include everything that has to do with money coming in the door, money being mailed, online donations,
Right.
whatever it
Getting
is.
very big.
Those are get called cash receipts procedures. Not just currency, but cash, checks, any kind of money. The flip side of that are cash disbursements procedures, and that would be documenting the same thing from how you go from an idea to spend money to actually spending it, and recording it and having it show up as a cleared check in your bank account and having it show up on your financial statements. So you want to document money coming in and money going out. Then an audit becomes your sort of annual checkup, either internally done by people in the congregation or externally, someone outside the congregation. How are you doing? Are you following your own procedures? I think a lot of times audits get reduced to somebody looking at the bank balance rather than looking at your procedures and how you're
honoring your actual
safeguarding.
procedures, right?
Exactly. So those are internal controls. Externally, we sometimes people think, oh, we we need to have an audit. And in my experience, there are a few situations where it is really advisable for a church to have an audit. I had a church that needed a forensic audit. That's not a good thing.
No.
But one of the things we want to keep in mind is because churches are not required to have audits in the same way that a nonprofit organization is, there are not a lot of opportunities for CPAs to learn specifically what makes churches different. I had one congregation, a CPA came and they sort of were wrapping up their report, and I said, did you get the information from the nursery school? He said, what? No, they said the nursery school was separate. I said, oh, you don't understand church vocabulary. That just means that they do their own thing.
Right.
It doesn't necessarily mean that they're legally separate entities. So you want to make sure that if you do work with an outside accountant, that they do really understand how your church works, and that they're asking the right questions, and that it's worth the expense.
That's right.
It's important to safeguard your processes. It's important to safeguard your procedures, but it's also important to spend money wisely.
That's right.
And that's where sometimes Maria had a good idea that one church could audit the other.
Right, and I've actually seen that happen. Two treasurers at two churches agreed to come in and audit each other's practices, and that went very, very well. So that's always an option, as well as there are firms out there who specialize in nonprofits. It's just take the time to find
Yeah,
that
you
firm.
have to do that.
Right. Okay, so we are on to our 8th best practice now, which is it has to do with identifying other sources of revenue. And this particular practice is very near and dear to my heart. It is one that I love because extra income funds extra ministry. Karen likes to call this one other people's money. I think she heard that from a congregation that she worked with. But the truth is many churches can't balance their budget simply on pledges and contributions alone. So it's really important that they're able to identify other sources of revenue. One of the most common is building rental. Before I take another step here, I am going to expand. There is a caution here. You need to get often outside advice from either a tax attorney or accountant, because there are potentially tax or insurance implications. But once you have that advice and potentially have them be involved with whatever agreements you strike with your tenants, you should be good. Building rental can be everything from a long-term lease to another entity with a complementary mission, whether it's a daycare or another nonprofit. It can be a rental for a period of weeks for a group that's coming in for a specific purpose, or it can be a one-time event like you're hosting a reception. The one other thing I would add with regard to building use, I like building use because it keeps your building busy 24/7, 365 days a year, and you're inviting others in who will potentially find some ministry that they resonate with, and maybe even you'll be able to invite them to worship with you on Sunday. But the other thing I would add is don't ever be afraid to charge for the use of your building. It's fair. People are putting wear and tear on the building. You don't have to charge a market rate. You can charge a below market rate, but help defray some of those costs of utilities and insurance and so forth. Another idea for other forms of income or fundraising, people do this all the time, the fall festival or a dinner with a silent auction, other kinds of events. The nice thing about those events is that it typically involves members of the congregation, which is another way for them to build community through those social interactions, and helps build community. You'll see this theme of community over and over. The next idea is actually soliciting contributions from the community for a particular mission. Let's say you have a food pantry and you will put out a call for cash donations from community leaders or in-kind donations from food distributors. The important thing is that you're connected to other entities within your community. That helps bring vibrancy, and we tend to see that the churches that have the best energy are those that are the most connected to others within their community. So, my last point I would make here is that it's also kind of a relief to the members of a congregation that they're not solely looked upon to be able to finance all the things that the church wants to do. Karen, can you talk to us briefly about compliance? I know that's our 9th practice, and we want to make sure that we
honor our 45 minutes of
Yes.
content?
Well, and it's certainly not nearly as fun as thinking of creative ways to involve the community. But one of the things that I find is a really important aspect of financial health is to have a healthy balance between understanding compliance issues with various federal and state and local reporting requirements, as well as, I mean, you don't want to get bogged down by all of it, but you also just can't blow it off. That you really need to understand payroll, whether or not you have a payroll service. I think there are churches that I find that say like, oh, we have a payroll service that handles that. But the payroll service can only report the information that you give it. And if you don't give it the full information, then you're not going to get full. And an example would be that you have a custodian who is your church custodian, and you pay him a salary, and then does some extra things on the side, and so it's not in the budget, so you just write that check as cash, or just write that check to him, and you don't tell the payroll service about it. When he comes to do his taxes, he's going to have unreported income, and if he were audited, he would be expected to have reported that income. So you would put your employees in an awkward position if you don't add them.
As well as the church not being in compliance.
Exactly,
Right, yeah.
exactly.
Yeah.
And it is important to note that treasurers are actually, this is probably the only area where both the federal government and most states consider the treasurer to be personally responsible for those payroll taxes. And so if there were an issue and the IRS were to come to the church and the church were to refuse to pay, the IRS would approach the treasurer personally. So it's in the treasurer's best interest to encourage that compliance. There are other kinds of things like reporting for new hires for both independent contractors and employees for child support issues. That's a federal law that is followed by many states, and but either if your state doesn't have the rule, then you have to comply with it on the federal level. There are things about housing allowance. The source I use in all of this is Richard Hammer, who writes an annual book that's the size of a phone book called like the 2018 or 2019 Church and Clergy tax guide. And it's, you don't have to buy it every year, although don't tell him I said that. But having one of those copies on hand in the church is really important for knowing what some of these issues are. It's important to, collect receipts when reimbursements are made to protect people. I had somebody get audited personally, and the IRS questioned deposits that were made from the church, and it had been for fellowship hour. And she had turned in her receipts, but I had them, so I could photocopy them. She made the photocopies, she gave them to the auditor. He said, great, we'll cross that off, it's not taxable income. But if she did not have those receipts, that would have been caught in their personal audit. So compliance the goal is to make sure the employer is being responsible and to avoid those costly penalties. And that sort of leads us into our final point, which is about just really managing things efficiently. You don't want to get so bogged down that all you're doing is spending time being compliant with stuff.
That's right.
You want to make sure you've got an efficient way to manage things, to share information, but also to know what's going on. So one of the things that I look at when I'm looking at whether I think a church is well organized or not, one thing I look at is how much money do they have in their bank account. Now, you might think more is better, but actually you want to be able to manage that cash flow so that you aren't throwing $50,000 in a checking account and getting zero interest. But on the other hand, you're not keeping that so low. It's $1,000 now, you can't pay your bills, and you have to make a transfer from, your investments, but that takes a week. That takes more time for your volunteers and your staff to work. So one of the things that I'm excited about that the Cornerstone Fund is doing is that the opportunity to basically purchase CDs.
That's right.
It's been there for probably the whole time of the Cornerstone Fund, but the accessibility of the money and the being able to log on and transfer money to your regular checking account is becoming more possible. And that means the Cornerstone Fund can become an option for cash management.
Absolutely. And we'd love to help you think through the overall picture of how you manage your cash. As Karen mentions, we have online access now, and we have both demand accounts and term accounts. so that we can be very flexible with meeting the needs of the church along with other ways that you manage your money.
And can I translate from demand account to a banker means checking account
It's
to
like
the
a-
rest of us.
Right, it's a money market account essentially, and
Yeah.
our term notes, our CDs, we're just simply not allowed to call them that because
Mhm.
we're not a regulated bank, which is a good thing. We are regulated by securities laws, and we do ensure the safety of the investments that individuals and churches put with us. But we then turn around and put those investments to good use by making loans to churches, which actually leads me to my next point, which is being a good steward of your building and your facility. I've mentioned this a couple times today. And over the years, Cornerstone Fund has loaned money to many churches to do things like replace a boiler, an HVAC system, doing an energy efficiency program, paving that parking lot, replacing that roof, or giving more accessibility to the building. And what's really important in this discussion is A, that you're being a good steward of your real property, but more importantly, there's a real cost for not staying on top of building maintenance. Unfortunately, we've seen firsthand the real expense of delaying maintenance. And in some cases, costs have grown from 4 times what the original expense would have been to almost 30 times what the original repair would have cost. One example comes to mind of a church that delayed repairing their roof. Along comes the snowstorm of the century, in goes the roof collapses, all kinds of literally collateral damage, and pardon the pun, but a real snowballing of expenses that was really something that turned out to be kind of catastrophic for that church. So please think about us when you're thinking through a project like this. And I think overall we're going to try and wrap up now so that we leave some time for Q&A. But I think the important thing that we've been getting to all along is to ensure that people, process, and purpose are all working together. Because when you have that, you can focus on the mission of the church and then be sure that the money is following the right ministry.
Yep.
All right. I think what we want to do now is move on to the Q&A, and I do see that some questions have been queuing up here. And the first question, Karen, I'm going to bounce to you,
Okay.
which is, are churches required to follow the new FASB nonprofit rules for restricted funds covered in the recent Journal of Accountancy?
Yes.
Okay.
Churches are not required, because of the separation of church and state, are not required to do certain things internally. Meaning you can do whatever you want to talk about your finances within your congregation. But the minute you need to communicate with the outside world, that needs to be in the language of nonprofit compliance. So the answer there is, is no for day to day, but then I get back to simplicity. Why have 2 different sets of rules? So I find that the nonprofit rules really help a lot. They really help to make those distinctions between donor restricted money and not donor restricted money.
Mm-hmm.
I actually spend a lot of time doing this. I think at the end, I have my website, which is congregationalfinance.com. I have a place for posts and questions, and people always have questions that other churches have. So I try to answer them sort of out loud by posting things there. And this whole issue with restricted funds is something that I find really useful. I developed my son is 21, so 22 years ago, developed a way to use QuickBooks to track fund accounting. And that's what I teach, and that's what works really simply and easily to be able to follow these new FASB rules. So thank you to whoever used all of the lingo and the vocabulary, which is great. But the second question that's up there is also an accounting question about what is accrual accounting. I realize I probably didn't say that very clearly. Basically, accrual accounting counts income and expense based on when you earn that income. So a good example would be that you rented out a building and a space in your building, and somebody had an office and they were supposed to pay you monthly according to the agreement, and they didn't. Well, the income would be counted for January, whether or not you received it. In accrual accounting, it would show you that you had earned that income and they were still paying. But what if they paid you for 4 months early?
Mm-hmm.
In cash accounting, you would show that whole 4 months in the year where, like, say in December, they gave you a check for January, February, March, April. In cash accounting, it would show in the previous year, and you'd think you had more money that year. In accrual accounting, it would count that in January, February, March, and April. So it's a way of accounting, and it's two different methods. And again, I have that answer on my website as well, in the
Wonderful.
longer version.
Okay, here's another question. Soliciting funds from outside the congregation in our state requires registration with the state and additional reporting. This is why we said it's important to know your state laws. This may require more accounting resources and costs. What would be the correct ratio for income to extra expenses for such fundraising? That's a great question. In terms of a rule of thumb, I think you're always going to have to do a cost-benefit analysis. If the costs and the effort, both real costs and people's time and energy, outweigh the income, I think it's a pretty easy decision. Even if they come close, it may be a pretty easy decision that you could be diverting those resources elsewhere to do something that's going to have a better return.
On the flip side, once you've done that registration,
Right.
then you become eligible for doing more of that. So it's kind of like anything. A similar example is that you can pay Vanco Services $10 a month to get Give by Text.
Right,
And someone say, well, I don't know, we don't get very many Give by Text. I'm like, that's because you don't have the service.
right.
But
Chicken
if you
and
have
egg.
one person who's going to give you $10 a month
It's
on Give by
already-
Text, then it's paid for.
Right.
Now you've got the service, and now you could see that there are others who want to give that way. So I would weigh it sort of in both ways. But you're right, it's important to know that you have those requirements, and make sure though that churches are required to do that. My state has that requirement for nonprofits, but churches are exempt from it.
Yeah, I did see a question in here about online giving resources. Vanco is one that Karen mentioned. And interestingly, Cornerstone right now is in the process of kind of cataloging all of the providers that are out there that provide online giving or text to give options. And once that's available, you'll see that on our website as
Yeah.
well. I think like everything we've mentioned to this point, there's a cost benefit analysis that needs to go into that and decide.
So someone has asked about software recommendations for churches that don't have a building or an office and no central place. This kind of talks about the difference between some of the online cloud sources that are available. I actually work pretty much exclusively with QuickBooks Desktop. And some people say like, well, there's the online version. The online version is quite a bit more expensive. It has a monthly fee to it as opposed to that. You can set up a virtual office by just literally setting up a computer somewhere and setting up online remote access to that. So you don't have to have a building. You don't have to have that. You can have a central place. It can actually be in somebody's home as long as that's connected to the internet. Then you can use a
Access
remote
it
service
remotely.
like LogMeIn
Mhm.
to give that access to various people within the congregation. So you can create a virtual office. You don't have to do it in the cloud. Again, you want to weigh the cost and
Cost
benefit of
benefit,
that.
as always. Treasurers are personally responsible for or liable for what? I think this is related to something you said
One of
earlier.
the things that I've been working on lately is the third edition of what's called a Church Finance Handbook, and it has information about this. And I actually asked this question of the lawyer the attorney that reviewed this, and what he said was that that treasurers have fiduciary responsibility for basically tax issues. And that would be payroll tax deposits and could be any of those other things. So it tends to be around that. Your insurance, your liability insurance will cover volunteer mismanagement, those sorts of things.
As well as officers and directors.
Officers and directors, if you're willing to press charges. So that's something where, yes, it covers it, but you don't need a separate bond if you have the United Church of Christ insurance, because it's tailored for the way that churches operate with giving that protection. But one thing to note is that it protects your employees and it protects your volunteers, but it does not protect independent contractors because it's assumed that they would have their own insurance.
Mhm.
And that sort of gets back to how do you balance that compliance with not being too nitpicky.
Right.
But you want to be careful when you hire independent contractors, including things like like nursery care. I never advise that you hire an independent contractor to do nursery care, because you should hire them as an employee so that they're covered under your liability insurance. And that becomes a financial management thing, because if there were a problem, that could be a huge issue for the
A
church.
huge liability issue for sure. So we have a couple more questions. We'll try to get to as many as we can. I'm going to jump to the second one, then we'll go back to the one on top. Do you recommend that churches use crowdsourcing or funding, GoFundMe, et cetera? I have only experience with one church that I know started a GoFundMe page for a particular project they were working on. And my assessment was it worked, but they aimed too low. And in many cases may have impacted the fact that they later needed to have a much larger capital campaign, because people gave to the GoFundMe, they felt good about their giving, but it was only a drop in the bucket for what the church really needed to raise. I don't know if you've had any experience with that.
I've had a few, and my approach is from more the operational side, and
Yeah.
I'd say read the fine print and pay attention to when and if the money would be transferred to the church. So make sure that any sort of crowdsourcing is done with the church's tax ID number and not an individual person's. And also look at if somebody's donating money, if they donate it to the church, it can be a tax deductible contribution. If they donate it through a crowdsourcing thing, sometimes it is, sometimes it isn't, but make sure you fully understand what it is that you're doing. I had another where you would only get the money if it got to a certain level.
Right.
So you want to just make sure about that. There are, again, though, it's a way to get the name of your church out there if you're doing something good.
But as a part of a total plan, I don't see
Right.
it as the be all and end all.
No,
Yeah.
no. And
Yeah.
for specific projects, I think it can do that.
Right.
So someone says that they've been, that their church is relatively new. It's about 10 years, and the pastor has been there for 6 of those 10. So I often think if I write I was going to say if I write a book, if I write another book, I might call it something like Life Cycles of the Church. So you've basically got a tween. And tweens have a lot of resistance to any systems. And so I would think, I think the question is really good, well phrased, because you have a new system, the newness has worn off, and yet the church is trying to achieve some financial independence. And if you think about it, the metaphor with a child, we teach children how to save money, but we don't teach them as often how to spend it. And I think I would try to start with some very simple, some of the graphics that Maria showed for financial reports, and just simplify everything, because it's much easier, like you say, there can be a resistance to a system. But if you have a cash receipts procedure, but it only has like 5 things to it, then once you've established that and gotten used to it, then you can sort of break that apart and end up with something with 20 steps. If you start out with something with 20 steps, you might just get the resistance only.
I would agree. I would start with a short list of what are the really important priorities that you want to achieve. Don't try and go after all 10 things on the list. In fact, have 1 or 2 that you're willing to give on, as long as you get the ones that you think are really critical to put in place and will help, as we mentioned earlier, with that continuity and with establishing a certain rhythm and a certain process, so that when there are changes in leadership, lay leadership or clergy, you have the good systems in place.
Yeah.
Okay, I think we have run out of time. Unfortunately, have not run out of questions. We'll figure out a way to make sure that we can potentially post some answers to some of the questions that we didn't get to. We are really thrilled for your engagement, really thrilled to have Karen participate with the Cornerstone Fund here today. And we hope you got a lot out of this. And stay tuned, there'll be more webinars coming your way. And we'll be following up with providing you with the content that we shared today, as well as some additional information. Any final thoughts, Karen?
I'm thrilled to be here in Cleveland. It was nice to be here too. I had to avoid the Patriots celebration parade in order to get out of Logan Airport, but it's nice to be here in Cleveland. And our denomination has so many resources available to us, and it's good to know that we can do something like this to share what we've learned in one place and to share it with others across the country. So thank you for joining us.
Have a great day.